FINRA Rule 2210 requires that an appropriately qualified principal must approve any communication that is filed with the Advertising Regulation Department, even if the communication otherwise would come under an exception to the principal pre-approval requirements. So we'll talk about the need to file communications with the Advertising Regulation Department. So that basically what this is saying is that before anything is filed, the principal has to sign off on it. You can't file something with FINRA's Advertising Regulation Department and not have a principal sign off on it, even though it might not be subject to the principal pre-approval before use rule. FINRA Rule 2210 requires the following regarding the supervision and review of correspondence and institutional communications. So we're much stricter when it comes to retail communications than we are when it comes to institutional communications and correspondence. Each firm is required to establish written procedures that are appropriate to its business, size, structure, and customers for the review by a registered principal of correspondence and institutional communications. So if you can remember, we talked about under the rule for retail communications, the general rule is that it must be approved by a principal. So the general rule for these two, the correspondence and the institutional communication, is that it must be reviewed by a principal. So retail communications approved by a principal, generally speaking, whereas these two, institutional and correspondence, must be reviewed. So it's within your realm of responsibility to review institutional communications, to review the firm's correspondence. The procedures regarding this must be in writing and be designed to reasonably supervise each registered representative. Where such procedures do not require review of such communications prior to distribution, they must include provisions for the education and training of associated persons as to the members' procedures, documentation of such education and training, and surveillance and follow-up to ensure that such procedures are implemented and adhered to. And evidence of such implementation must be made available to FINRA upon request. So it's this idea that, for example, a correspondence can be prepared by a registered rep. The principal does not have to look at it before the email is sent out, but the principal is required to review, and the firm must have procedures in place to train the registered rep as to what institutional communications can include and what correspondences can include. What are all the applicable rules? So that's the basic gist of this rule. There are record-keeping requirements under FINRA Rule 2210. So 2210 is the major rule of the communication rules. There's others as well, but this is the big one. Record-keeping. Retail and institutional communications, the record shall be kept in a separate file for a period beginning on the date of first use and ending 3 years from the date of last use. Institutional communications and retail communications. Kept in a file from date of first use. Date of first use up until, so this is definitely one you gotta know, 3 years from last use. 3 years from the date of last use. So what needs to be kept in these records? A copy of the communication and the dates of first and, if applicable, last use. the name of any registered principal who approved the communication and the date that that approval was given. In the case of retail communication or institutional communications that is not approved prior to first use, we talked about some exceptions for retail communications, the pre-approval exception rules. The name of the person who prepared or distributed the communication. So the only time that the records related to these communications must include the name of the person who prepared or distributed the communication is when it wasn't pre-approved prior to use by a principal. Pre-approved prior to use, I know that says the same thing. So this idea that if a principal didn't have to sign off on it before use, then we need the name of who prepared it. If the principal signed off on it prior to use, then we don't need the name of who prepared it. So be careful there. You also need to include within these records information concerning the source of any statistical table, chart, graph, or other illustration used in the communication. If the retail communication relies on the fact that another firm already filed the communication, we talked about that, the name of the firm that filed the communication with FINRA, and a copy of the Advertising Regulation Department's review letter. So all of that must be kept in the files from the date of first use through 3 years from the date of last use. What happens when a firm is new? So it's a new member firm. They have a very specific rule. FINRA Rule 2210 requires a firm that has not previously filed with FINRA's Advertising Regulation Department to file its initial communication with the Advertising Regulation Department at least 10 business days prior to use. So this is a very specific rule for new firms. So the filing of anything that needs to be filed with them, at least 10 days prior to first use. So this is a big deal, prior to first use. This filing requirement, and these are business days, 10 business days, is going to be true for the firm for 1 year. Now, there's been a slight change in how this year is counted. So, of course, we're only concerned with the way it is now. So this 1 year period of time begins as of the date in the Central Registration Depository, the date that the firm first has been accepted to FINRA membership. So there's this date within the CRD when FINRA accepts the firm into membership. So this 1 year period of time begins as of the date in the CRD system. Not a year from the date of first filing, okay? So the firm that is new must file all advertisements with FINRA's Regulation Advertising Department at least 10 business days prior to first use for 1 year from the time in which they became a recognized member firm for 1 year. Now, a new member firm filing requirement only applies to certain broadly disseminated retail communications, this 10-day prior to first use, such as generally accessible websites, print media communication, and television and radio commercials. So these are the things that would be subject to the filing for the new firm 10 business days prior to use. There are a few items that FINRA is really cautious about. So FINRA has rules, not for a new member firm, but just in general, pre-use filing requirements. So FINRA Rule 2210 requires the following categories of retail communications to be filed with FINRA at least 10 business days prior to first use, and to withhold them from use until any changes specified by the Advertising Regulation Department have been made. The categories of communications that must follow this pre-use filing rule include retail communications concerning any registered investment company that include self-created rankings. What? So if it has a self-created ranking, it must be approved prior to use. So filed at least 10 business days prior to first use. Retail communications concerning security futures follow this pre-use filing requirement, as well as retail communications that include bond mutual fund volatility ratings, which we'll see a little bit more about in a moment. Retail communications in which the only reference to security futures is contained in a listing of services of the firm does not have to file the pre-use filing rule. So if all it says is that the firm offers the ability to purchase security futures, then the pre-use filing rule would not apply. But if it was a recommendation to buy security futures, then yes, it would be subject to the pre-use filing rule. Concurrent with use filing requirements. So actually the only thing really we talked about pre-use for a new, pre-use filing for a new firm, pre-use filing for these interesting ones, security futures, that's kind of an exception to the rule. Generally speaking, it's a concurrent filing rule, concurrent with use. So FINRA rules require the following categories of communications that must be filed within 10 business days of first use or publication. Retail communications concerning registered investment companies and direct participation programs. Retail communications concerning closed-end registered investment companies. Okay, so let's just kind of stop there for a minute and review what's going on. There's a lot in these communication rules. So generally speaking, retail communications. So written or electronic communication provided to more than 25 retail investors in any 30 calendar day period. So that's just the definition of it. Generally speaking, it has a principal pre-approval rule. Generally speaking, that is true. And generally speaking, these retail communications must be filed with FINRA, their Advertising Regulation Department, within 10 business days of first use. So this is a concurrent filing rule, not pre-filing, concurrent filing rule. So if it has to do with mutual funds, whether or not they're open-end or closed-end, a DPP, direct participation program, falls under the same rule as well. What else follows within this concurrent with use filing requirement? All templates for written reports produced by or retail communications concerning an investment analysis tool. Retail communications concerning CMOs, which are collateralized mortgage obligations, that are registered under the Securities Act of 1933, and that is derived from or based on a single security, a basket of securities, an index, a commodity, a debt issuance, or a foreign currency. This includes publicly offered structured or derivative products, such as exchange-traded notes. So ETNs fall into this concurrent filing requirement, retail communications concerning exchange-traded notes. Advertisements concerning government securities do not have to be filed with FINRA within 10 business days of first use or publication. In the old days, they used to, but not anymore. So FINRA doesn't care about any of the advertisements, any of the communications that have to do with government securities. They do not have to be filed. There's no concurrent rule there. I suppose if you had to categorize government securities, they're safe. Don't say that, but that's kind of why the rule is that way. Other filing requirements. If a firm has filed a draft version or storyboard of a television or video advertisement, so that's already been filed. So the storyboard has been filed, or just a draft version of the advertisement. Then the firm must also file the final filmed version within 10 business days of first use or broadcast. A firm must provide with each filing the actual anticipated date of first use, the name, CRD number, and title of the registered principal who approved the communication, and the date the approval was given. So that's a pretty big rule. A firm must provide with each filing the actual anticipated date of first use, name, CRD number, and title of the registered principal who approved the communication, and the date the approval was given. Each firm's written and electronic communications may be subject to spot check procedures, of course, and firms must submit requested material within the time frame specified by the Advertising Regulation Department. So because we do have pre-approval rules, you can get audited, the firm can get audited by FINRA's Advertising Regulation Department at any time. So you have to be able to provide the records related to communications at any time. Within an annual report, you will find what's called management's discussion of fund performance. FINRA requires firms file this. It usually looks like a letter. So FINRA requires firms to file the management's discussion of fund performance, MDFP, management's discussion of fund performance, and any non-required sales material that are contained in a mutual fund's annual or semi-annual report if a firm intends to market the fund to prospective investors. Generally speaking, firms are going to market funds to new investors all the time, so that the management's discussion of fund performance, heck, if you've never read one of those, get your company's annual or semi-annual report and read it. They're actually really interesting if you're a nerd like me and find this stuff interesting. So it is required to be filed with FINRA. Things that are excluded from needing to be filed with FINRA. So excluded from filing with FINRA. Communications that have been filed with FINRA previously and that are to be used without material change. So you don't have to file it all the time. As long as it's been filed once, that's fine. Retail communications that are based on templates that were previously filed with FINRA, if the changes are limited to updates or more statistical or other non-narrative information changes. Retail communications that do not make any financial or investment recommendations or otherwise promote a product or service of the firm. Okay, so this is interesting. So this idea that if the retail communication is not making a recommendation or trying to advertise what the firm does, things like communications solely related to recruitment, or communication solely related to changes in a firm's name, personnel, electronic or postal address, ownership, offices, business structure, officers or partners, telephone number, a merger or acquisition by another firm. Those do not have to be filed with FINRA at all. Retail communications that do no more than identify a national securities exchange symbol of the firm or identify a security for which the firm is a registered market maker, those don't have to be filed with FINRA. Neither do tombstones, press releases only made available to the media, or communications that do no more than identify the firm or offer a specific security at a stated price. The retail communication simply identifies a security for which the firm is a registered market maker. So it's not saying buy it, it's saying we are a registered market maker in this security, not required to be filed with FINRA. FINRA does not require the filing of prospectuses or any other document that has been filed with the SEC or with the state. However, this exclusion does not apply to free writing prospectuses. So the prospectus, generally speaking, filed with the registration statement regulated under federal securities law. So it's not that the prospectus isn't looked at by someone, it's just that it's filed with the SEC, and it kind of falls under their jurisdiction, not under FINRA's. However, FINRA Rules 2210 and 2211 do apply to broker-prepared, widely disseminated free-writing prospectuses, but not to a free-writing prospectus prepared by or on behalf of the issuer of securities. So we have to mention what the heck is that. So the Securities Act of 1933, Rule 405, defines a free-writing prospectus as a written communication, including electronic communication, that constitutes an offer to sell or a solicitation to buy securities in a registered offering by means other than the statutory prospectus. So it's a free-writing prospectus. It was introduced as part of the SEC's Securities Offering Reform Act in 2005 and was intended to provide issuers with greater flexibility in the use of communications during the registered offering process. A free-writing prospectus may include information that is not included in the registration statement, but it may not conflict with information in the filed registration statement, including any prospectus and any Securities Exchange Act reports incorporated by reference. A free-writing prospectus must contain a legend advising investors that the issuer has filed a registration statement, including a prospectus with the SEC for the offering to which the communication relates. Before investing, the investor should read the prospectus and other documents filed by the issuer. Copies of these documents can be obtained for free through the SEC's website or from the issuer or any underwriter or dealer participating in the offering. So it just allowed for the communication of an offer to sell or a solicitation to buy securities in a registered offering without going through the whole giving out the prospectus rule. So a free writing prospectus. So if it's a broker-prepared, widely disseminated free writing prospectus, then the rules, FINRA rules, do apply. But if it was prepared on behalf of the issuer of the security, then the rules do not apply. Retail communications that include reprints of independently prepared articles or reports do not have to be filed with FINRA. Correspondence do not have to be filed with FINRA, and neither does institutional communications. So this idea that retail communications must be filed with FINRA within 10 days of first use, that's the general rule. Principal pre-approval is required. Correspondence and institutional communications do not have to be filed with FINRA. They're subject to review by the principal. What else does not have to be filed with FINRA? Communications that refer to types of investments solely as part of a listing of products or services offered by the firm. Retail communications that are posted on interactive electronic forums, such as on an electronic bulletin board or an interactive forum that is contained on a social media website. These may be considered to be retail communications, assuming the forum is available to retail investors. So they would be accepted, though, from the needing to be filed within 10 days of first use with FINRA, although they're very oftentimes considered to be retail communications. Press releases issued by a closed-end investment company listed on the New York Stock Exchange that are subject to the immediate release policy. Information required to be published under the immediate release policy may include, among other things, dividend announcements. So if it's a press release concerning a closed-end investment company listed on the NYSE, it does not have to be filed with FINRA. FINRA Rule 2210 has general content standards. This is common sense. The idea that all firm communications must be based upon principles of fair dealings and good faith, must be fair and balanced, must provide a sound basis for evaluating facts in regard to any particular security or type of security, industry, or service. Firms shall not omit material facts. Do not leave out something that would make the information presented misleading. You never have to disclose all information. You only have to disclose all material information. Firms, of course, are prohibited from making any false, exaggerated, unwarranted, or misleading statement or claim in any communication. Firms are also prohibited from publishing, circulating, or distributing any communication that the firm knows or has reason to believe contains an untrue statement of a material fact or is otherwise false or misleading. Firms are expressly prohibited from making promissory statements or claims. So no profit guarantees, no loss guarantees. Information in a communication may be placed in a legend or footnote only in the event that the placement would not inhibit an investor's understanding of the communication. Firms must ensure that statements are not misleading within the context in which they are made and that they provide a balanced treatment of risks and potential benefits. Communications must be consistent with the risks of fluctuating prices and the uncertainty of dividends, rates of return, and yield inherent in investments. Firm communications must be clear. When preparing communications, firms must consider the nature of the audience to which the communication will be directed and provide details and explanations appropriate to the audience. So you have to think of the audience when you're preparing your communications. Do you think communications can ever predict or project the future? No. Communications may not predict or project performance. Past performance may not be used in a way in which it looks like it will recur in the future. So anytime they show past performance, there's usually at the very bottom in fine print a disclosure that says, the past is not indicative of the future. You may lose all the money you invest. Communications cannot make any exaggerated or unwarranted claim, opinion, or forecast. Hypothetical illustrations of mathematical principles are allowed so long as they do not predict or project the performance of an investment or an investment strategy. Comparisons and disclosure of a firm's name. Any comparison in communications between investments or services must disclose all material differences between them. So this idea, you can't make a communication that compares the services offered by your firm with another firm unless you explain the material differences. So you have to explain any applicable differing investment objectives, costs, expenses, liquidity, safety, guarantees or insurance, fluctuations of principal or return and tax features. So you can't compare the performance of the stock market versus a fixed product like an annuity. If you did, you'd have to compare, you'd have to explain how entirely different they are. Or the growth mutual fund with the income fund, going to be very, very different. If you were to compare the two, you'd have to explain all their differences. All retail communications and correspondence. So, very specific rule, must prominently disclose the name of the firm. Retail communications and correspondence must prominently disclose the name of the firm. Reflect any relationship between the firm and any non-member or individual who is also named in the communication. If the communication includes other names, reflect which product and services are offered by the firm whose name is on the communication. Firms are allowed to use the name under which it conducts its broker-dealer business as disclosed on the firm Form BD, as well as a name by which the firm is commonly recognized or which is required by any state or jurisdiction. So all retail communications and correspondence must include the firm's name, which would either be the name filed on Form BD which created the broker-dealer or name under which it's commonly recognized. Blind recruiting advertisements do not have to include the member firm's name. So a recruiting advertisement that's blind, the whole point of the blind means that there's no member firm's name associated with the advertisement.